Othaim markets. The kingdom's value grocer, 11 billion riyals of baskets a year, listed as 4,001. In 2025, revenue rose to 11,089 million riyals. Net income fell to 250 million. The machine still turns. The margin went missing. The plan goes and finds it. This is the complete CFO in business report. 3 signals stand out. First, the margin break is the story. Gross margin fell 391 basis points, and EBITDA dropped a third. Second, the machine still turns. The cycle runs 24 days negative, and suppliers fund the stores. So, the payout outran profit at 166% of earnings. The plan ties it back to cash. The plan runs 6 actions on one road. A margin recovery reprice, private label to 15%, return-gated store openings, lease discipline on every renewal, the at Idil media is, and a payout tied to free cash. Sequenced from 2026 to 2030, each action has a gate before the next. The SWOT is honest. The strengths, a national value machine, funded by negative working capital. The weak points, the margin break, leverage at 4 times, and a payout above earnings. The opportunities, repricing, private label, and retail media. The threats, the price war, the Egyptian pound, and rate resets. Michael Porter's 5 forces drawn on value grocery. Buyer power is high. Value shoppers switch for halalas. New entrants keep opening, from discounters to regional chains. Scale buying holds suppliers level, and private label pushes further. Substitutes probe from quick commerce. Rivalry is a knife fight, and price perception is everything. The model is a float-funded machine. Source at national scale. Distribute daily to every format. Then the bear. Othaim. The value promise. Hypermarkets for the big shop, supers for the district, corner stores for the street. Saudi retail is the core. The Egyptian market adds growth with currency attached. Real estate rides sidecar. 4 pillars carry the operational plan. The people pillar, store productivity by format and incentives on store profit. The technology pillar, price and promo analytics and shrink control. The infrastructure pillar, return-gated openings, refits over builds. And the digital core, the app loyalty and retail media income. Every risk carries a probability, an impact, and a named owner. Margin erosion is high and high, owned by the chief executive and merchandising. Lease-heavy leverage sits with Treasury at 4.1 times. The payout policy itself has an owner. The board, tied to free cash. That is deliberate. Governance keeps the plan honest. The board sets risk appetite and watches the register. The audit and risk committee owns controls and capex stage gates. Management delivers a monthly KPI pack, a quarterly board review, and an annual plan refresh. The context is Saudi. Consumption grows with population, and stretched households seek value. That is the franchise. Against it, the price war presses daily. Private label is the answer at the shelf, and quick commerce resets convenience. Egypt adds a second network and a second currency. The riyal stays pegged. The offer, drawn format by format. Hypermarkets for the full shop. Supermarkets on the district corner. Akala format stores down the street. Fresh produce that wins the trip. Butchery and fresh chicken counters. In-store bakery. Private label on the value shelf. And wholesale for the trade. One machine, every format. Peer comparison at live market caps. Now, the grocer contrast. Othaim rings up nearly twice Bin Dalwood's revenue, 11 billion against 6.3, and earns fewer riyals of profit, 2.3% net margin against 4.3. Mix, price, investment, and Egypt explain it. Closing that gap is the entire plan. Valuation, with every assumption on screen. Risk-free, 4.45. Saudi equity premium, 5.01. Adjusted beta, 0.6. The WACC lands at 6.7%. The plan discounts to 5.9 riyals per share. The market says 5.34. Read the grid, not one number. No buy, sell, or hold verdict, ever. 5 catalysts to watch. The basket is repriced through 2026. Private label scales to 15% of sales. Egypt stabilizes. EBITDA climbs back above 9% by 2029. And by 2030, the payout is fully earned by free cash, not floated. 1 grid, 10 years. Actuals in green, plan in blue. Revenue climbs from 8,404 million to a planned 13,884 million reals. Earnings per share builds towards 0.65. 2022 is shown for what it was, a one-off year, labeled illustrative on every panel. 5 years in one picture. Revenue never stopped growing, 8.4 billion to 11.1. The margin did the breaking, from 4.8% of net margin to 2.3. The share halved from 11.58 to 5.34. The market marks the margin, not the machine. 2 pictures explain 2025. The bridge shows volume adding 38 million reals at prior margins and the margin break taking 417. And the cash picture shows why the machine survives its own wound. The float keeps 751 million of operating cash flowing. The transformation map is a road. 2026, the basket reprice. 2027, private label scales. 2028, Egypt stabilizes. 2029, EBITDA back above 9%. 2030, the payout fully earned. 1 road, 5 gates. 9 numbers hold the budget up. Growth of 4 to 5% a year. Gross margin walking from 19.4 to 21.7%. Capital spending at 3% of revenue, easing to 2.5. Zakat and tax near 5%, and a payout near 90%. The balanced scorecard makes it accountable. Gross margin back above 21.7%, owned by merchandising. Private label at 15% of sales, owned by the own brand team. Dividends inside free cash flow, owned by the board. Every target has a cadence and a name. The 5-year plan, in numbers. Revenue builds from 11,643 million to 13,884 million reals. EBITDA recovers to 9.2%. Earnings per share reaches 0.65. Dividends stay generous but earned. All of it labeled illustrative, not guidance. The master budget allocates 2027 month by month. Ramadan begins on February 8th. For a value grocer, it is the Super Bowl. February takes 10.4%. Eid al-Adha lifts May, and December closes on promotions. 12 months waited the way the kingdom fills its baskets. 3 final charts close the budget. The Ramadan quarter leads the phasing. Of every 100 halalas of budget, cost of goods takes 80. And EBITDA keeps 7.9. Firm cash compounds to 1,214 million reals across the plan. The complete Othaim markets report is live at cfoinb.com. That is cfoinb.